Hello, good evening, everyone. Today is December the 7th, 2023. रात को 10:50. So it's too a bit late for Indian markets, but global market is open. Largely, the video will be in English since we are covering the global markets. We will look at the global markets, global indices. Those who do not know me, I'm Shananda Dash. I'm a forex and commodity market practitioner and also equity trader largely, but I come from a global background, global understanding, global macro understanding. और मैं ईलर्न मार्केट के साथ जुड़ा हुआ हूँ. आई एम अटैच्ड विथ ईलर्न मार्केट्स. और ईलर्न मार्केट्स में आई एम अटैच्ड विथ देयर मोस्ट prestigious program, that is the trading mentorship program. There I serve as the forex and commodity mentor. So these videos I'm basically making to help out the students. Largely, obviously, the technical setup that I'm using, that I trade with that one, that is the multi-asset with SD Rainbow Wave. You can subscribe to it if you want, but broadly, this video is largely to help out the students in their direction. So we will take a quick look at what's happening in the global equity market space. And for that, we are going to use SD Rainbow Wave version 1 and SD RSI X. Together, these two will create the fountain of gold setup. So I've added them already in the chart. You can clearly see them. So this is the S&P 500 today from the turnaround in the RSI week. That is clearly a momentum comeback. But this momentum comeback is not enough as per the reading in RSI X. 5 of the powers are with the bears. Here's also the short-term momentum are with the bears. So the background has turned green. So this may not be enough. The buy trade win probability has fallen significantly. It's still a buyer's market broadly, but the win probability has fallen 60%. Let's look at the global indices here. We can look at the S&P 500. It is up 0.3 points in strength compared to yesterday, and its strength is no longer rising. It's more of a neutral. Dow 30 is actually lost some of the points, 1.5 points in strength. It's also neutral. NASDAQ is actually the top performer of the day. So it's significantly higher. Russell, no major changes. The weakness continues in the main Asian market, Joe. That is the Hong Kong 50, China, and now the weakness is prominent in Japan as well. So Japan, China, and Hong Kong, these weakness we will keep a check on whether this is spreading to the other markets or not. So this is from Europe. I can look at the Germany is broadly in the positive mode, not major changes. Nifty 500, if you see the relative strength, the strength meter, the Nifty 500 remains one of the strongest, along with Sensex, small cap, and mid cap. So let's have a quick look at S&P 500. Now we have seen it. Let's look at the Dow Jones Industrial Average, which is another key benchmark. You can see two red caps has come. That means it's undergoing a correction. And what kind of correction it is? It is not a trend-based correction. It's more like a momentum loss and price action fight correction. So whoever holding any kind of Dow Jones ETF, you should consider some profit booking. A mega risk event week is coming up. Tomorrow is non-farm payroll. Then on the next Tuesday, we have inflation data. Wednesday, we have Federal Reserve FOMC meeting. On Thursday, we have European Central Bank, Bank of England interest rate decision, and Friday will end with Bank of Japan. So a power-packed week is coming up next week. So you might want to reduce some of the risk in Dow. But Nasdaq has been a much better comeback story here. You can see our momentum comeback, but still, as per the rainbow wave, we are not there yet. There is a sell signal. This is a contra, not so important sell signal. We discussed this. Sell trade win probability was low. So that's actually helped if we did not sell, but this is still, this comeback is not sufficient enough to say that we should again go to Nasdaq. In India, there is Nasdaq ETF exchange traded fund is available. So when such this kind of bull run is looks like or more prominent, we can go some Nasdaq exchange traded fund. Let's look at the Russell is next. Russell 2000, it's on the same story of a correction, story of momentum loss, but Russell is much better in terms of probability. What we saw, 64% win probability is there. What about the other index? Like one of them is VIX. We want to have a look at the volatility index. We saw the rise in the volatility index, which we warned last week that earlier this week, that this comeback in the volatility index, if the strength continues, that is actually a bad news for equities. But Indian market is much, much stronger, is not considering this global weakness so far. So India's market is pretty strong. But if global markets gets affected, this Hong Kong, China, Nikkei weakness spread, then definitely we'll be looking at a different story. But so far, this VIX comeback, we have to be a little aware of. Now let's come down to Asian market. One is Singapore. Singapore is one of the top-notch developing countries. So we are going to take a look at Singapore. But it's an export-oriented economy, and with China being weak, its stock index is also on the downside. And as it is moving lower with consolidation to sell trade win probability is 50, consolidation is 43. So it's about, I think, bearish range, we can call this market in Singapore. Then we'll come down to Japanese Nikkei. We already saw the weakness. Now you can see the momentum loss further gathering pace. The background has now turned red. So now this weakness is quite prominent in Nikkei, and it is broadly can spread further into US markets as well. Coming down to Hong Kong, Hong Kong has been going down and having pretty bad time for quite some time now, and it's still going down. If we come down to the weekly chart, a more longer term chart, we can clearly see that this is a fresh breakdown attempt. So we can definitely expect about 15,500 test of Hong Kong, and that will make the market mood more on the bearish side. You can have a look at China, the China market, a weekly chart we are right now looking at. And in the weekly chart, you can see the weakness is prominent in China here. And overall, our Sensex, Nifty, the small cap, mid cap, you can see from compared to the global markets, it remains significantly strong side. So some of the stocks can actually go into over hyper mode, overvaluation mode, as global traders will be looking for some pockets of investment. And with Indian markets being exceptionally well in the Asian weakness, India can actually see further FII flow coming into some of the good quality, good earnings based stocks. Now, after this look at Asia, we are coming down to Europe, Netherlands economy we are starting with. It remains broadly in a range, but in a bullish control with 82% win probability. Momentums are with the bulls. Italian market, it remains bullish as per weekly chart, but I think we are seeing some form of momentum loss, marginal momentum loss, as can be seen from the background. From the reading has changed. Bear power is now 1. Now bullish criteria is now for the bulls 10 factor is working for the bulls. Among 12, market remains bullish, but slight momentum loss is now visible. This is, we are going to now Spain. Spain is IBEX, and here the from the chart from the RSI and this other with this price action is quite clear. This market is now moving into a correction. What a wonderful ride it was on the buy side. Since the buy signal, a wonderful ride it has come, but looks like the ride has come to a halt, a significant drop in the buy trade win probability. Then we are moving to France, which is CAC 40 is the main index of France, and there is strong momentum going on in French market, 89% win probability. So anybody long CAC 40 ETFs, I do not see any reason to exit right now. Other than if you have any reason to for liquid cash, you might want to liquidate some of your fund, but other than that, this CAC 40 market is quite strong. Next, we come to Germany, German DAX. Yes, German market remains quite strong. We are seeing some marginal momentum loss, but 10 factors are still firing for the bulls with 89% projected win probability for the buyers. So we have now taken a look at the global indices. Now we'll have a quick take look at what's happening with the Indian Nifty, where finally we have closed. I already posted a video especially for Nifty analysis, Nifty Bank Nifty. So I'll have a quick look at this. So 82% win probability still. So it's a buyer's market, but it's down from 93. Some momentum loss is one of the reason. So 10 factors still remains bullish. There is no reason to think that the market can be bearish. I'll have a bullish outlook here. And looking at Bank Nifty, similar here. Bank Nifty is less bullish in reading compared to Nifty. We had quite a big jump in Bank Nifty, quite a solid break, but it is not able to keep up with the momentum. We can, after this red cap correction, we might see a comeback. So let's place an alert. Price action bullish. Price action bullish means full green candle, which is the minimum criteria for a rainbow to enter any trade. So the minimum criteria means this one is going for a correction. The majority length of the candle is green. So that means major control remains with the bulls in terms of price action. So this is largely like to be a flattish sort of correction, after which I think further buy move likely to come. So far, no reason to think that sellers are in control. It's a completely buyer's market. And the buy trade projected win probability remains around 71%. Only problem is the number of factors that are with the bulls are still on the lower side. 7 out of the 12 factors are bullish, while bears do not have much power with only one factor with them, but a lot of other 4 factors are currently in more of a neutral mode, which indicates probability of going into range. So thank you so much for watching this video. If you're watching it, if you're liking it, if you want looking for a regular update, I will suggest subscribing to the channel. Thank you so much for watching it, and have a good night.